Ladies and gentlemen, welcome back to the channel. I want to go over a couple things here in this video. This article says more movies, more variety, more money. The box office is starting to catch up to pre-COVID levels. Now, why this is important, believe it or not, fundamentals do matter when all of these hype catalysts are said and done. If fundamentals continue to improve, AMC can turn a profit. Well, look what happened to GameStop. They were up 50% at one point after reporting their earnings, still closing out the trading day up about 45%. I don't think anyone would argue with a rally like that in AMC stock right now. So I think this is pretty important to pay attention to. I also do want to go over some of the important catalysts coming up in this next upcoming week, as well as give you a rundown of the Vortex data. So, ladies and gentlemen, this is going to be a short, sweet, straight to the point kind of video. Hopefully, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. So, let's dive into it, guys. I read the title, more movies, more variety, more money. The box office is catching up to pre-COVID levels. Key points. The domestic box office reaped $1.8 billion during the first 3 months of the year, lagging 25% behind 2019 levels. To compare, last year ended up 34% behind 2019's pace, and even more movies are on their way to theaters this year after Hollywood's production schedule returned to normal. A steady stream of mid-tier films have augmented the performance of massive blockbusters such as Avatar: The Way of Water. For nearly 3 years, the domestic box office has been chasing the highs of the pre-pandemic era, hoping that blockbuster franchise films would fill seats and sell popcorn. While superheroes, fighter pilots, and blue aliens have lured moviegoers back to cinemas, it's the recent steady stream of mid-budgeted films from a wide variety of genres that has bolstered ticket sales. Quote, "We're actually catching up with 2019 levels," said Paul, not gonna try to say that name, senior media analyst at Comscore. Quote, "Remember 2019 was no slouch. It was the second highest box office year with $11.4 billion. The performance of the 2019 box office has become the benchmark for the industry in recent years, as it represents the last full year of theatrical normalcy before the COVID pandemic. Since movie theaters reopened to the public in late 2020, the domestic box office has steadily recovered, generating significantly higher ticket sales each year. Last year, the box office reached $7.5 billion, up 64% from the $4.58 billion in ticket sales seen in 2021, but it lagged around 34% from 2019. Industry analysts attributed the smaller box office to a more limited inventory of theatrical releases, not a general disinterest by customers to return to the cinemas. After all, the number of wide releases, those that open in more than 2,000 locations, was down just about the same percentage as the overall box office totals. In 2023, that volume is coming back, and it's, quote, "driving a healthier market overall," said Sean Williams, chief analyst at boxoffice.com. Between January and March 31st, studios opened 18 wide releases, a 25% drop from the 24 released during the same period in 2019. Similarly, the first quarter box office in 2023 also lags by 25%, generating around $1.8 billion during the first 3 months of the year, compared with $2.4 billion in 2019. The number of film releases is important to the industry. In 2022, there were only 16 wide releases during the first quarter, and the box office generated $400 million less in ticket sales, tallying $1.41 billion. I'm gonna give it a shot here. Both Gerardian, yeah, it's terrible, and Robbins, you see, that was easier to say, Robbins, okay, told CNBC that blockbusters and franchise films are important, but a steady stream of low to mid-tier budget movies is also critical to the overall success of the industry. While Disney's Avatar: The Way of Water and Ant-Man and the Wasp Quantumania, alongside Warner Brothers' Creed 3 and Universal's Puss in Boots: The Last Wish, were the top-performing films during the first 3 months of the year. Original titles like Megan, Jesus Revolution and Cocaine Bear delivered strong results, boosting the overall box office. And if I don't get demonetized there, that's going to be crazy. Best performing films of 2023 so far. Avatar, 280 million. Ant-Man, 210 million. Creed, 143 million. Puss in Boots, 128 million. Megan, 95 million. John Wick Chapter 4, almost 95 million. Scream, 93 million. A Man Called Otto, 64 million. Cocaine Bear, 63 million. And Jesus Revolution, 50 million. Quote, the most encouraging sign to me is that there is a more variety than there was last year, Robin said. He noted that there were more titles for adult audiences like 80 for Brady, A Man Called Otto, as well as genre films like Plane 65 and Knock at the Cabin. And that kind of variety is appealing to potential moviegoers. Around 33% of customers said they would go to theaters more if the box office offered a wider array of film genres and choices, according to a new study by United Talent Agency. The survey, which polled 2,000 U.S. people aged 15 through 69, also found that 75% of respondents plan to go out to the movies more often in 2023 compared with 2022. Here are some of the biggest movies that will be coming out. The Super Mario Bros. Movie comes out on Wednesday. Air, Pain, Renfield, The Pope's Exorcist, Evil Dead Rise, Bayou is Afraid, Are You There Yet? God, It's Me, Margaret. Okay, that's for April. May, Guardians of the Galaxy Volume 3, Fast X, The Little Mermaid. June, The Boogeyman, Spider-Man Across the Spider-Verse, Strays, Transformers, Rise of the Beast, Elemental, The Flash, Asteroid City, Joyride, Harold and the Purple Canyon, Indiana Jones and the Dial of Destiny. Come on, man. Give me a break. And that's just the June. That's just the June. Some notable names there. Indiana Jones, The Flash, Transformers, Spider-Man, The Boogeyman, they're all notable names. Guardians of the Galaxy, Fast X, The Little Mermaid. Super Mario Bros. Movie. I actually know some people that have already went and seen that one. So, yeah, some pretty notable names here just up until June. So I do think this is going to reckon well for AMC earnings, and I do think earnings minus any of the things that we have going on right now, obviously like court litigations for AMC specifically, that's going to be the number one potential stock moving catalyst right now. But coming on earnings as well, if you get any hint or inkling of profitability coming at some point in 2023, or hopefully sooner rather than later, I mean, look what happened to GameStop. And that's really all you really have to say on that one. Look what happened to GameStop. Now, if we take a look at the Ortex data for AMC stock as of right now, the estimated short interest of free float sitting at 25.12%. The free float out on loan sitting at 39%, 200 million shares currently out on loan, with the days to cover at about 5.5 days to cover. Utilization at 100%. Cost to borrow rates ranging on the high end from 1,050% to the cost to borrow average at about 900%, and cost to borrow minimum at about 400%. Interactive brokers sitting at that about 400%. 130 million shares that are currently sold short. So keep in mind, there's about 70 million shares that are out on loan right now that have not been sold short yet and have not been returned. So there's a lot of dry powder on the sideline to either see those shares be used to cover on short positions or to see those shares used potentially against us. So I would definitely keep that in mind, that there's a lot of people that are sitting right there on the edge of, what do I do, right? That's having optionality. That's actually a very smart thing from some of these hedge funds, when in all reality, some of their moves have not been that smart, like all of them piling into puts on April 28th. You're seeing the lowest positive order value or the lowest bullish open interest you've ever seen in the history of AMC stock. Calls is only sitting at 9.77% for April 28th. 90% puts. Everyone is betting that AMC is going to fall like a rock after April 27th. And a lot of that open interest is really focused around that $3 price. And I think any, delay of this court process, anything the judge could say that would not be an instant dismissal of the court. So basically anything besides a dismissal of this litigation would be very, very bullish and help squeeze shorts out of their short positions. And I would expect to see a huge rally at that point. If you guys are curious on my position on that, how high AMC stock could go, etc., make sure you guys check out the last video that was just posted. Now, if we take a look at the calendar here, guys, as far as economic data coming out this week, Monday and Tuesday, you're not going to have anything. But you kick off Wednesday with the inflation rate, core inflation rate, year-over-year, inflation rate year-over-year, and core inflation rate month-over-month. Month-over-month core is what's going to be important. You are expecting 0.4%. Last month's reading was 0.5%. That's really going to be the one thing people care about. These year-over-year numbers, they don't matter nearly as much as the core inflation rate month-over-month, because we want to see, is inflation accelerating or is it decelerating? Is it continuing to slow, and by how fast is it continuing to slow? That's the big thing. FOMC minutes comes out at 2 p.m. on Wednesday, and I should say all of that economic data, the inflation data, comes out at 8:30 in the morning. 2 o'clock, 2 p.m. Eastern Standard Time, FOMC minutes. This is a transcript of the last Fed meeting, so it can give you indications on why they did, what they were discussing, things like that. Doesn't always give you a huge market reaction, but if it gives you new information or something that, hey, maybe the markets were not expecting the Fed to talk about, right, can give you a reaction in the markets. Now, PPI, producer price inflation, producer price index, whatever you want to call it, month over month, you're expecting a positive 0.1%. That is up from negative 0.1% in that February reading, so that will be important, as well as that initial jobless claims for the week of April 8th, expecting 237,000. Last week's reading was 228,000. I doubt that's going to be an important data point for this week, because you have so many other big data points, as well as some earnings that will be coming out as well in this upcoming week, and we'll talk about that in the next video some more. 8:30 in the morning on Friday. Don't count this one out. It's retail sales month over month for March. You're expecting a negative 0.9% reading. Last month's reading came in at negative 0.4%. The consensus for last month was negative 0.4%. So they seem to be pretty decent as far as estimating what retail sales are going to come in as, and by them I mean economists. So if that's the real number, if you're almost down negative 1%, that's not going to be good. Last year in 2022, in the beginning of the year, you were down like 2% for retail sales, and that's when GDP started really to be negative in a big way, and we were in a technical recession. So it will be important, guys. Do not count that one out. So that is really going to do it for this video. We covered a lot of ground in a very short amount of time. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching. Enjoy your Easters, and I will see you in the next one.